Today I'm going to be showing you how to trade the daily bias and how we can implement it into our trading to have a higher win rate. What's up everyone? Today we're going to be talking about daily bias. And a lot of you have been asking me what it's all about. So today I'm going to be showing you how to trade the daily bias and how we can implement it into our trading to have a higher win rate. The daily bias is basically the higher time frame outlook for where we believe price is going to go. What we can do with this information is use it to trade in that direction and have a clearer idea where price is going to go on the higher time frame, thus giving us a higher win rate when we are entering on the lower time frames as well. So with the strategy videos that I've released already, a lot of you guys have been asking me why I don't include a daily bias, and now this is for a simple reason. The daily bias is more of a learned skill where you need to practice it and use a little bit of your ICT knowledge to be able to predict where price is going to go. So it's a bit more difficult to have a more mechanical approach to this. I'm going to give you a few rules that I use and questions that you need to ask yourself when looking at the daily bias so that it's a lot simpler for you to implement this in your trading at the moment. So essentially, there are three main questions you need to ask yourself when you are looking at the daily bias. The first question you're going to need to ask yourself is, where has price recently come from? First thing you need to do is identify the most recent swing point, which is right here. Then we're going to ask ourselves, has this swing point broken the swing high or swing low and swept liquidity from that swing high or swing low? And as we can see, price has swept the liquidity of this swing low. The second question you need to ask yourself is there liquidity or a fair value gap that is nearby? So the first step is that we're going to identify the fair value gap that is nearby, which is right here. We have traded into this fair value gap. There is also one right above this area here. We're also going to identify nearby liquidity. So as we can see right here, this would be the nearby liquidity to target. So as you can see, price has taken this sell side liquidity, and now we're looking for price to come up and take this buy side liquidity here. And so this would start to form part of our daily bias. And one of the most important questions to ask yourself is, what movement would invalidate this daily bias that you have marked out? On step number 3, we are busy determining what will invalidate this move. So what would invalidate this move is if price comes lower and invalidates this order flow from the order block and this fair value gap. So if price were to come below this point, we would now know that price is no longer continuing in this direction. Now, when it comes to the daily bias, there are a few things that you need to understand. Now, one of the things you need to understand is that sometimes your daily bias will be incorrect. Sometimes price will go against you. The daily bias is just there to create a higher probability trade on the lower time frames. What you'll notice is that price won't always continually go in your direction. It will sometimes retrace, but the bias will be in the direction that you have determined, thus making your trades higher probability when trading in this direction. The other thing you need to realize with the daily bias is that the trades that are setting up in the opposite direction to your bias, so if you are looking at long trades only on your daily bias, there will be short trades that play out, okay? You want to be avoiding trades that go against your daily bias as they are lower probability. The daily bias is a tool that allows you to have higher probability trades, but not only higher probability trades, trades that have a higher risk reward ratio as well. The reason these trades have a higher risk reward ratio is because the higher time frame is confluencing with your lower time frame entry. This means you can hold the trades for much longer and have a higher probability of them playing out and hitting those longer targets that you have marked out. And the last thing I want you guys to realize is that the daily bias is just an added confluence to your ICT trades. I use this often with my trades in order to push my win rate up of the existing strategies that I use. The strategies that I've given you guys on this page work on their own without the daily bias, and the reason that I created them like this is because the daily bias sometimes introduces a level of discretion into your trading where you cannot actually put a lot of mechanical rules in to be able to get to your daily bias outcome. So with this being said, guys, use this as a tool to increase your win rate like I have with the trades that I conduct. And what you'll find is that the win rate of the strategies that you are trading when it comes to ICT concepts will increase greatly. So what we're going to do now is have a look at the charts and have a look at daily biases and examples of the daily bias playing in our direction, and how you can go ahead and identify the daily bias for yourself with your own trading and allow it to create a higher win rate and higher probability trades for yourself when you're trading ICT concepts. The first thing we need to do here on US 30 is identify the most recent swing point, which is right here. We're then going to identify, did it break swing structure? And it did. So it took out this swing high right here, and so we can start to assume that price is going to continue lower. However, this isn't all of the ingredients we need and all of the proof that we need to verify this. Now we're going to look at where is the most recent fair value gap, which is right here. So now we can also see that price could be trading into this fair value gap in future to fill it up. And the liquidity point is over here because this is the swing low. So we are looking for price to take out this sell side liquidity. And so we can start to build a stronger case for price going lower. Now, what will also keep us on the right side of the market is, again, the third step, identifying where price would invalidate this bias. And for me, we would look here at this gap, so we can start to assume that price is going to react to this fair value gap and go lower. We've got this order block right here, which I'll make a different color. Okay, so this order block right here, if this order block gets taken out, I would then start to think that the market is ranging a bit more. Okay, and price is starting to range a little bit more, and maybe we should wait for a clearer bias where price takes out this zone, and then we can start to look at going short again. So let's see what price does end up doing. So like we said, price has continued lower, and so within this candle here there would have been a lot of short opportunities, and that's really what the daily bias does. It allows us to get in on the right side of the market. So now again we are looking for price to break the sell side liquidity, and that's what we're really targeting. We targeted firstly this fair value gap, which it has come through right now, so the chances of this being taken is higher. So let's see what ends up happening, and yes, it takes out this sell side liquidity, and so now I would be looking for a swing point to form here, and potentially for price to start moving higher from here. So let's see what happens. could also see price take out this swing point as well and then start to move higher. Okay, there was a fair value gap here, but we can see that it was already mitigated. So price has done that, and you can see with a huge wick as well. Price came, it took everybody out of these positions if there were stop losses sitting underneath here, and now we can start to look at price flipping bullish, okay, to target. Okay, let's first see. Okay, so it is still going a little lower. Okay, so now we've got a swing point. All right, this is our swing point. Okay, so the first question we're asking, did it take out a swing high or a swing low? Yes, it did right here. Okay, then we're identifying our closest fair value gap and liquidity, which would be this point here. This is our fair value gap. Okay, where price will be targeting, and the liquidity point will be this swing high right here. Okay, and so now we can start to formulate the hypothesis that price is starting to go a bit higher. Okay, price is in a bullish momentum. Now we need to also figure out the point at which this daily bias becomes invalidated. Okay, so let's see what ends up happening. And as we can see, our daily bias is still correct. Price is moving in a bullish manner. Okay, and see, this is the power of daily bias. It gives us a clear direction of where we're going, and it lets us stay out of the market when things are consolidating. So you can see here's a fair value gap that has formed. Okay, and here is the order block below it. Okay, and we can quite safely assume that if price starts to violate this order block, that price is starting to range a bit, and we should maybe stay out of the market for a bit. But no, price created the order block, okay, and the fair value gap. It's tapping into that fair value gap, so our bias is still long to take out these highs. So let's see what ends up happening here. So now price has invalidated our bias. So now we would no longer be looking for longs. So now once price takes out this swing low, we can start to look at bullish scenarios again. Okay, so price has taken out and we have a swing point. So this is our swing point, and price has taken out this low. Okay, so that's question number 1 answered. Where is the nearest fair value gap? It is right here. Okay, fair value gaps are always green for me. And so we can start to formulate the hypothesis that price is going to continue higher and take out the liquidity that is resting above the swing high. Okay, at the very least, it will target this, not this, sorry, this here. Okay, and so we can continue on and on just like this, but you can see that the daily bias gives us a very strong indication of the direction of the market and lets us get into higher probability setups based on the fact that we have a much stronger understanding of the overall higher time frame direction that the market is going in. So guys, if you have made it this far, you guys are absolute champions. Your patience is always going to be rewarded. Patience pays in this trading game, guys. So again, I want to thank you, and I would just like to ask that you click the subscribe button below and comment below and let me know what content you want to see in the next video. So that's it from me, guys. Cheers, adios, have a good one.